capital injection, and other forms. By the end of the year, the market value of China's investment fund had exceeded trillion yuan, which was only trillion yuan a year ago. That is to say, the development in 1 year is twice that of last year's total. Statistics also show that in the number of investors opening accounts in the Shanghai and Shenzhen stock markets reached 1,000, with an average of over 10,000 accounts per trading day. In the context of global liquidity surplus, the opportunity for concentrated release has finally emerged, with the accumulation of years of sustained high-speed growth energy in the national economy, enhanced profitability of enterprises, appreciation energy of RMB, and enhanced international competitiveness. Although facts have proved that the soaring stock index and the instantaneous expansion of market value are unsustainable, both the number and scale of institutional investors such as investment fund, QFII, QDII, and hundreds of millions of individual investors, as well as the equivalent of financial assets accounting for half of the stock market, and the degree of securitization of state-owned assets indicate that China's economy is undergoing sustainable and irreversible structural changes, and the capital market is becoming the country one of the most important wealth investment and management platforms for enterprises and the people, shifting from excessive reliance on bank savings to the capital market. China is entering an exciting great era from the commodity era, the era of capital finance, the dual-track system of market price and planned price, but a split strategy of opening prices while providing targeted subsidies. Although the relevant departments are still hanging on CPI and extremely sensitive to indicators, the use of administrative force to force down prices has gradually been falsified by the market, and all parties are forced to accept reality through market lessons. It will be a matter of time before prices are relaxed. But this is not to say that opening up is as simple as opening up. It requires the maturity of various conditions such as timing, policies, and situation. This will be a gradual process. Considering the affordability of society, relevant parties are likely to adjust the pace and speed of price liberalization with changes in the situation, giving society enough time and space to transform and digest. At the same time, liberalizing prices does not mean that the government will let go. Regulation can still affect prices, but the methods have changed. It is no longer administrative control, but indirectly affects prices by influencing market supply and demand, such as the rice bag, the Gettable Basket project, or price adjustment funds. So the crux of the problem lies not in opening up prices, but in how to maintain social stability. Looking at the impact of reform, the most likely impact is on the price-sensitive vulnerable groups. In order to stabilize people, ease hearts and promote reform, the government's bottom-up targeted subsidies may become a protective cushion for the gradual liberalization of resource prices in the future. This turns the key question to how to target subsidies, whether directly or indirectly. The reason why educatio and reform and healthcare reform are in a dilemma is because relevant parties attempt to reduce the burden on the public through indirect subsidies from institutions, schools, hospitals, etc. The starting point is correct, but subsidy institutions are prone to rent-seeking and corrupt. But they cannot effectively compensate. Therefore, indirect compensation is better than direct compensation. The focus of future subsidies is likely to shift from subsidizing hospitals and schools to directly subsidizing patients, impoverished students, and the poor with quasi-currencies such as medical vouchers, education vouchers, and food vouchers. On the other hand, the operating mechanism of subsidies precisely involves the sensitive core of structural reform. Indirect compensation and direct compensation will originate from two different power operations. The former requires the separation of the linear functions of the administrative department from the powers directly under the state, while the latter requires research on the separation of decision-making and administrative execution. It is difficult to truly achieve separation in the short term. It may be a long-term trend towards future policy goals. But under the pressure of the situation, strengthening the power of course, there are historical reasons for the insufficient capital and high debt and leverage ratios of Chinese enterprises due to, under the traditional system, the main funding for enterprises comes from government grants, and only working capital is provided by banks. At that time, the debt ratio and leverage ratio of the enterprise were both at a very low level. Due to the inclusion of corporate profits in national finance, enterprises generally lack the ability to generate internal financing. After the reform and opening up, due to the extremely difficult national economy, the national finance also fell into the dilemma of two proportions decreasing, where the proportion of fiscal revenue to national income and the proportion of central fiscal revenue to the entire fiscal revenue decreased. In addition, state-owned enterprises faced historic reforms, and relevant departments decided to implement the allocation to loan reform, which means that the financial support for enterprises changed from mainly from fiscal appropriations to mainly bank loans. The debt and leverage ratios of Chinese enterprises immediately skyrocketed at the end of the 20th century due to the heavy debt burden on enterprises. Relevant departments pushed the loan-to-investment reform will convert some loans to enterprises, mainly state-owned enterprises, into investment equity for enterprises, accompanied by the arrangement of debt to equity, in the hope of reducing the debt ratio of enterprises and reducing their debt costs. However, the progress of this reform has not been smooth. The debt ratio, leverage ratio, and debt expenditure of Chinese enterprises have always maintained a relatively high level. In this situation, the channels for internal financing of Chinese enterprises are very poor, and excessive reliance on external financing is inevitable. This pattern makes the contradiction between China's financial and physical sectors more prominent than other countries. In summa, why? I believe that The Financial Mystery, a comparative study of the German financial system, is a breakthrough for China, the solution to the dilemma of financial services for the real economy, provides a thoughtful and actionable reform approach. This approach can be summarized into two main points. Firstly, to streamline the relationship between the financial sector and the real economy sector with the fundamental direction of reducing financial intermediary costs, financial explosion, and personality splitting. Greenspan's memoir The Age of Turbulence came out at a delicate moment. The real estate bubble burst. The subprime crisis is spreading. The answers to irrational behaviors found in the book from the perspective of psychology and anthropology, while they are ultimately rooted in human nature. The tendency to turn from excitement to fear has not only become the best footnote to this crisis, but more importantly, it also inadvertently revealed that although Greenspan has been in charge of the Federal Reserve, which represents the authority of rationality, for years, his heart is full of fear for irrationality and powerlessness for foam. What a great split this is! In fact, when it comes to human personality, most people will believe in its innate and unchanging characteristics. But from agriculture, the evolution of the three-character classic from the well-known concept of human nature is inherently good at the beginning, similar in nature, but far apart in habits to the industrial civilization's concept of human nature is like jade. And both nature and emotions can be shaped undoubtedly. Y highlights the dynamic and malleable aspect of human nature. In other words, the production and lifestyle styles under different cultures play an extremely important role in shaping the character of people living in them. For example, in the agricultural economy, the production method of relying on the weather for food and the exchange method of physical objects such as gold and silver as general equivalents bring about a social civilization characterized by honest labor and self-restraint, accompanied by the mechanized production mode of the industrial economy, and the exchange method of currency, paper currency, as the general equivalent. There has been a great expansion of human subjectivity, distortion caused by a single working method, and diversification brought about by the symbolization of value standards. Human personality has also become rich and complex. With the accelerated evolution of civilization, the evolution of this personality that originally belonged to several generations is becoming increasingly concentrated, shrinking to a generation, especially in the short span of nearly half a century. Information civilization and financial civilization have successively arrived, and profound changes in production and lifestyle, as well as various new features, are all impacting people's original thinking habits and behavioral concepts, and even subtly changing people's personalities themselves. Firstly, a major characteristic of financial civilization is irrational prosperity. From the price-to-earnings ratio to the market dream ratio, which refers to don't focus on performance or value principles, just dream-like growth expectations. For example, the stock price of LMZ, which is mainly engaged in toothpaste, once soared to yuan because its holding of about % shares of CITIC securities gave people huge The conspiracy theory failed in the subprime crisis. It is undeniable that there have been instances in history where certain families or consortia controlled a country or the international financial system for a certain period of time, such as the Rothschild family, the Morgan Consortium, etc. However, in today's global financial integration, financial strategies between countries and the strategies of multinational consortia are highly likely to hedge or offset each other in the process of implementation, even if the conspiracy is successful. As a member of the international financial system, it is also difficult to stay out of the crisis. Just like Nazi Germany provoked World War II, but was finally destroyed by World War II. Thus, compared with honest labor and to each according to his contribution in industrial economy, financial civilization controls capital with wisdom, but the result is full of uncertainty. And the most important point is that Fukuoka once said before that story is the general equivalent of financial civilization. Its characteristic lies in identifying the differences in things and exaggerating them infinitely. One of the reasons why Britain and the United States can monopolize the forefront of financial civilization is this. For example, when Morgan Stanley opened the door to the non-performing asset market in China's banking industry in the problem faced by the Chinese banking industry was clearly how to reduce the non-performing asset problem in new loans, while Morgan mistakenly described it as how to dispose of existing non-performing assets. In the United States, Morgan's main method of disposing of non-performing assets is clearly to buy them and wait for the recovery of the macroeconomic environment. But in China, they promote the so-called popsicle theory rather than slowly melting them down. It is better to sell them quickly, and for a long time. The U.S. Congress has always regarded real trade as the entire economic issue between China and the United States, and has been working with the White House to reap the benefits one by one. So, it's not just small scammers who are scammers, but big companies, institutions, and countries. As the saying goes, behind every huge fortune lies a profound evil. The financial explosion has brought unprecedented prosperity and high-quality living enjoyment to people. But it has also laid the foundation for injustice, the seeds of sex, uncertainty, and deception, just like the industrial economy. Start from utilizing resources to being limited by them, from creating wealth to wasting wealth. And when a thing develops to its extreme, alienation arises. In this way, it seems easy to imagine the terrifying prospect of a financial civilization that is passionate about storytelling. On the one hand, the alienation of credit. The financial explosion has exploded the connection between tempting interest rates and honest products, such as the bond. The financial crisis has not yet bottomed out, but no one mentions currency wars anymore, as they are considered war dollars in the book The Murderous and behind-the-scenes Wall Street tycoons died before they got out. While most of the survivors sold themselves to the government, were denationalized, and even did transsexual surgery to return to the bank to survive. The expected market of painful shearing by the crisis did not happen, which made people obsessed with explaining the financial crisis with conspiracy theory very frustrated. Did investment banks die of mass suicide? Just as currency war itself is a specious rumor strung together with bizarre conspiracies, even such a book is rumored to be a copycat version because the original version comes from the United States. However, the views in the book perfectly match the needs of those who have suffered heavy losses due to misjudgment of the situation, as dressing themselves as victims of uncertainty is more likely to gain sympathy. Therefore, as soon as this book was published, it was highly sought after and appeared at high-level financial seminars, serving as a shield against pressure. However, with the passage of time, the currency war has no effect on the overall situation, and it is still not eloquent enough to be used for casual conversation after meals. The essence of the financial crisis is money surplus, but in the conspiracy theory, money can be controlled unilaterally and completely. The 6 major families behind the U.S. government and the Federal Reserve control the situation, using cunning tactics to influence currency flows and earn large amounts of money, in order to achieve their goals by killing people and de-Buddha. However, the most fatal flaw of this logic is that the government and the 6 major families do not have the control they expected. They may have controlled the currency within the banking system. Once the currency flows out, it is not only difficult to track but also repeatedly transforms into capital and hot money. What is even more terrifying is that during this process the scale of the currency continues to expand. The expansion ability continues to improve, and speculative models are extensively replicated, creating a vast amount of money, book assets or liabilities registered on the balance sheets of financial institutions are in reality dependent on the price of resources and assets. The contradiction between the leveraged expansion of monetary capital and the limitation of the price rise of assets and resources will automatically close positions under the law of value. Obviously, this is the original sin of self-expansion and self-evaporation in finance. So on the one hand, the runaway of currency falsify the possibility of a holistic and long-term monetary conspiracy. On the other hand, the automatic liquidation of currency has falsified the possibility of a century-long and shocking conspiracy. Of course, it is not ruled out.